Financial statements tell you what happened. Financial analysis tells you what to do. Have you ever looked at your financial statements at the end of the month and thought, why did we make so much revenue, but there's almost no cash left? Or why are sales growing, but our profit is getting smaller? Or maybe you discover that labor costs increased, expenses got out of control, or your cash flow became tight, but you only discovered the problem after the month was already over. This is one of the biggest financial challenges for small and growing businesses. The problem is not necessarily that you don't have financial information. The problem is that you may be getting the information too late. Today, I want to explain why on-time financial analysis is so important. We'll look at what business owners should be monitoring and how MLA Business Services can help companies turn financial data into better business decisions. Now let's look at part 1. Bookkeeping is important, but it is really only the beginning. Every company needs bookkeeping. You need to know how much revenue you generated, how much you spent, how much cash you have, what you owe, what customers owe you. But bookkeeping mainly answers, what happened? Financial analysis goes one step further. It asks, why did it happen? And more importantly, it helps you answer the question, what should we do next? Financial analysis provides that path forward. For example, your profit and loss statement may tell you that your company generated $200,000 in revenue. That sounds great. But financial analysis may reveal that labor cost increased from 30% to 38% of revenue. Gross margin decreased from 45% to 36%. Marketing expenses increased significantly, but revenue didn't increase at the same rate. Accounts receivable are growing, which means your company is making sales but not collecting cash fast enough. Suddenly, you see a completely different picture. Revenue alone doesn't tell you whether your business is financially healthy. Next, part 2, why timing matters. Imagine your company has a financial problem starting in January. Your labor cost begins increasing. In January, it increases by $5,000. In February, another $5,000. In March, another $5,000. If you identify the problem in January, you may be able to fix it quickly. But if you don't analyze your financial information until the end of March, the company may already have lost $15,000 or more. That is why financial analysis should not only be accurate, it needs to be timely. Business owners need information early enough to take action. Because financial information has the most value before the decision is made, not after. Once the money is already spent, your options become much more limited. Part 3, high revenue does not always mean high profit. This is another common misunderstanding. Many business owners focus primarily on revenue. They say, our sales increased 20% this year. That sounds positive. But the important question is, what happened to your profit? Imagine last year your company generated $1 million in revenue and $150,000 in profit. This year, revenue increases to $1.3 million. Great. But because payroll, rent, outsourcing, advertising, financing costs, and operating expenses increased, your profit drops to $100,000. Revenue increased 30%, but profit actually went down. If management only looks at sales, the company appears to be growing. But financially, the company may actually be becoming weaker. That is why we need to monitor both top-line growth and bottom-line profitability. Part 4, cash flow can be more important than profit. Another critical area is cash flow. A company can show a profit and still have cash problems. Why? Because profit and cash are not the same thing. Imagine you invoice a customer $100,000. The accounting system may recognize the revenue, but the customer doesn't pay you for 60 or 90 days. Meanwhile, you still have to pay employees, rent, vendors, insurance, taxes, loan payments, and other operating expenses. So your financial statements may say you're profitable, but your bank account says something completely different. That is why financial analysis should also monitor operating cash flow, accounts receivable, accounts payable, working capital, cash reserves, debt obligations. The question isn't only, are we profitable? It is also, do we have enough cash to operate the business? In part 5, we ask, what should business owners monitor? There are several important financial indicators every business owner should understand. The exact metrics depend on your industry, but some of the most common include gross profit margin. How much money remains after the direct cost of providing your product or service? If your gross margin keeps declining, you need to understand why. Maybe supplier costs increased, maybe labor productivity decreased, maybe your pricing is too low. Net profit margin. After all expenses, how much profit are you actually keeping? A company can have millions of dollars in revenue, but still have a very small net profit margin. Labor cost percentage. For many service businesses, labor is one of the largest expenses. If labor cost increases faster than revenue, profitability can disappear very quickly. Operating expenses. Which expenses are increasing? Are they necessary? Are those expenses generating a return? Accounts receivable. How quickly are customers paying you? Increasing receivables can become a major cash flow problem. Current ratio. Do you have enough current assets to cover your short-term liabilities? Debt ratio. How much of your business is financed through debt? Too much leverage can create significant risk. Now for part 6, don't just look at 1 month. Another important part of financial analysis is trend analysis. 1 month does not always tell you very much. Maybe your profit margin this month is 12%. Is that good or bad? We need context. What was it last month? What was it 3 months ago? What was it last year? Suppose your net profit margin was January 18%, February 16%, March 14%, April 11%, May 8%. Every individual month may still show a profit, but the trend is down. But the trend is clearly telling you something is wrong. If you wait until the company becomes unprofitable before taking action, you waited too long. Good financial analysis helps identify the direction of the business. Part 7. Financial analysis should lead to action. This is one of the most important points. A financial report should not simply be a PDF sitting in your inbox. Financial analysis should help management answer questions. For example, why did gross margin decline? Why did payroll increase? Which department is over budget? Which products or services have the highest margin? Where are we losing money? How much cash will we need? Can we afford to hire? Should we increase prices? Financial analysis becomes valuable when it supports an actual business decision. It transforms data into concrete management actions. Part 8. Why small businesses often don't have this information. Large corporations usually have entire finance departments. They may have controllers, analysts, and CFOs. But small and mid-sized businesses may not have the budget to hire all of these professionals. As a result, many small businesses rely primarily on bookkeeping and tax preparation. Those services are important, but there is often a missing layer between accounting and management. Financial analysis, that's the gap MLA. Business Services is designed to help fill. Part 9, what MLA Business Services offers. Our goal is to help small and growing companies have access to financial insights without needing a full internal team. Our services can include financial analysis. We help analyze financial statements and business performance. We review revenue trends, gross margin, labor costs, and financial ratios. The goal is not simply to give you numbers. The goal is to help explain what changed, why it changed, and what management should pay attention to. Fractional CFO support. Some businesses need CFO-level insight but are not ready to hire full-time. Fractional CFO support can help with strategy, budgeting, and forecasting. This gives business owners access to higher-level financial support without necessarily carrying the cost of a full-time executive. Internal audit and internal controls. Growth creates another challenge: control. As companies become larger, owners cannot personally monitor every transaction. Internal controls help reduce operational and financial risks. We can help review areas such as approval processes, payment controls, and financial workflows. Part 10. AI and professional review. Technology is also changing financial management. At MLA Business Services, we use AI and automation to help streamline the financial analysis process. AI can help organize information, identify trends, compare periods, and highlight unusual changes much faster than traditional manual processes. It saves time and increases accuracy. But AI alone is not enough. Financial decisions require business judgment. That is why our approach combines AI-powered analysis plus professional review. Technology helps us process information more efficiently. Professional review helps interpret what those numbers actually mean. The goal is simple: faster information, better visibility, better decisions. Finally, Part 11, from monthly reporting to continuous financial awareness. The traditional accounting model is often too slow for modern business needs. But modern businesses move quickly. Prices change, labor costs change, sales change, customer behavior changes. Companies need to move toward having continuous financial awareness. You should be able to recognize financial problems while you still have time to correct them. Because the earlier you identify a problem, the more options you usually have. If there is one thing I want you to remember from this video, it is this. Financial analysis is not only about knowing your numbers, it is about knowing your numbers in time to make a decision. Don't wait until the end of the quarter to discover that your margin disappeared. Don't wait until your bank account becomes low to start thinking about cash flow. Don't wait until expenses are out of control. The earlier you understand your financial position, the more time you have to protect your company and improve performance. At MLA Business Services, we provide the support you need to make decisions faster. We also offer a free financial health assessment to help identify profit leaks and cash flow concerns. If you're interested, visit US website, mlabusinessservice.com. APAC website, mlabusinessservice.net. We are here to help your business grow and thrive. And subscribe to the MLA Business Services YouTube channel for more videos. Thank you for watching, and I'll see you in the next video.